shit. That's what I'm talking about.
Wait! Okay, now, from the beginning.
Thank you guys,
Thank
you Michelle for nice introduction. So yeah, as Michelle said, I'm a tax lawyer. I work for some law firms in basically in corporate law and tax law, and I became a full-time digital nomad. So I now decided to dedicate myself to you, basically, to other digital nomads, and to help you to find your best way to reduce legally your taxes. Because most of the time we think that if you offshore a company, this name offshore, is something that is like illegal or something that is not proper to yourself. But actually, it's not like that. As I will show you, there are many ways to reduce legally your taxes. So let's start. So who am I? As Michelle said, I'm Francesco, I'm 36 years old, and I was a nomad escaper last year with Michelle. And I had to put this disclaimer because this presentation is not a financial advice. So the information that I have here in this PowerPoint are for everybody. You can find it online, whatever you want. So is basically something that everybody can find, but I know that is one of the most boring subjects in the world. So I know that is not exactly what people are looking for. So why nomad taxes? Because there are many solutions for people that are willing to travel, like us. It's not easy, but definitely possible, and because you need an expert to go in a country and to set up your company or your personal income where you are based. For example, if you want to go to Portugal, if you want to go to Estonia, wherever, you definitely need someone that helps you to do that. But it's definitely possible to do that and to reduce legally your taxes. So the first difference that I want to stress is between freelancers and entrepreneurs. Why? Because, for example, Michelle is an entrepreneur. She has his own company, and she has so many workers that work for her. So she can create basically a good tax strategy because she owns a company. It's really important to stress it out because if you want to create a good tax strategy, you need to have a company. But I will show you later, is not something that is mandatory. You can do it as well if you just have your freelancer and you have your personal income. But I suggest to you to create a company because it's definitely better for your tax strategy. Both of freelancer and entrepreneurs can be digital nomad. So you can easily be a digital nomad being a freelancer or being an entrepreneur. So first of all, I want to start with the digital nomad visas. It's insane how many countries right now are offering digital nomad visas that are 34 countries nowadays. And think about the fact that the first country was Estonia last year, July 2020. It was the first country, and now on nowadays there are 34 countries. So it means that there are countries that are in competition to attract digital nomads. And that's really important because it means that there is a community that grows more and more, and it means that countries want us because we can attract other people, we can bring other people into the country and make the country, let's say, quite more interesting in some sort of point of view. So these are the digital nomad visas in Europe that for a European person is not necessary to have it because basically if you are in the Schengen area you can live wherever you want, but if you're not from the EU, these countries are offering digital nomad visas in Europe that are Estonia, that as I said before was the first country to do that. You need a minimum requirement of 3,500 euro per month to live there. There is Croatia as well, but I heard that it's quite difficult to get the visa right now. Portugal, I don't know, many people are living in Portugal right now, so you know better than me that you can get a digital nomad visa, both as if you're not European, or if you're European, you can get the NHR. There is Germany, and the last one was Greece, that just enacted a law like 1 week ago. So it's nice if you want to spend some time in Greece. Other countries around the world that offering digital nomad visa are for Europeans. That's and for everybody in the world, but most of our Europeans. I think that I found out that the most interesting is Costa Rica, but you need 3,000 euro per month. Costa Rica is important as Georgia and Dubai because you will see later, you can pay less taxes living there. So as you can see, there are other countries like Seychelles, Barbados, Bahamas, Curacao, Taiwan, Sri Lanka, and so on. So now let's talk about the main topic. So let's talk about taxes. First thing that we have to stress it out is that even if you are a citizen of one country, it doesn't mean that you have to pay the taxes in that country. I think that you know, but it's good to point it out. So you can live wherever you want, and there is an international rule that you have to live more than 183 days in a country to be considered a fiscal resident of that country. Why 183 days? Because it's 6 months plus 1 day. And when you live 183 days in a country, basically you're subject of that country. That means that the country can ask you to fill all the forms and to pay taxes there and so on. So it's important as well to point it out that you have to live in a country that signed a lot of bilateral treaties. Why? Because if not, bilateral treaties are basically an agreement between two countries. Okay, so it could be like Portugal with England or Italy with Estonia and so on. If you have these bilateral treaties, basically you pay just one-time taxes, because if you're in a country that didn't sign bilateral treaties, you have the risk to pay twice your taxes. So this is the basic concept of taxes, of taxation, and it's really important as well, because we should live as a digital nomad in a country that are in the territorial-based system. What does it mean? Basically, there is the resident-based tax system income that is the most famous. 130 countries in the world that applies this kind of tax system. That is most of the EU, Australia, Japan, Canada. And it means that you pay your taxes worldwide. So if you are, for example, an Italian resident, and you have a company in Italy, and you have some profit, I don't know, in Thailand or in Australia, wherever, you still have to pay your taxes in Italy, even if you didn't make money in Italy, but you have to pay taxes in Italy. So what we have to do is to go in this kind of country that are territorial based, like Georgia, Singapore, Costa Rica, Philippines, Portugal as well, in such a way that means that you pay taxes just when you are invoicing or where you are making money in that particular country. So for example, if I live in Costa Rica, and you can get a digital nomad visa, if I live in Costa Rica, but most of my money are in Italy, in Germany, or wherever, you are not taxed of that money. So you are not taxed in that invoice that you are giving for that country. You are paying tax only in the money that you are making in Costa Rica. So if you buy a property, you rent it out, or if you have some business there, you pay taxes there. But if you are not resident there, are not making money there, you don't pay taxes. And it's really important to stress it out, because if you want to reduce your taxes, you should consider to live in one of these places. So then there is the non-dom, that are non-domiciliated, that are basically Malta, Ireland, UK, and this kind of country, Anglo-Saxon, the Anglo-Saxon regime, that are almost like the territorial based, for the people that are not citizens of that country. So for example, if you can live in Malta, you can be, if you are a Malta citizen, it doesn't apply to you this kind of taxation, but this one. So this is quite it applies both, just if you're sorry, it applies like if you are non-dom. It means that if you are a citizen of Malta, you are living in Malta, it applies to the residence based. If you are not citizen, and you are like an HR in Portugal, you are paying taxes just in your as territorial. You pay taxes just in Malta if you make money in Malta, but if you make money around the world, you don't pay taxes. Another concept is citizenship based. That is basically just in USA and Eritrea. That's it. It means that if you're a citizen of a country, if you're a citizen of the States, you pay taxes wherever you are in the world. So that's the thing that happens. Just there are some from States here. Yeah. So you know, no? About that. But I found out that there is this kind of possibility that if you earn less than $1,008, you basically can have your money back.
Less than 1,000?
100,000, sorry. 100,000, yeah, 1,000 is not exactly the amount of money that you want. So, and also there are like countries that are zero taxes country like Monaco, Vanuatu, and Cayman Island, but this is the proper offshore countries, what everybody knows about offshore. So, it's possible to pay zero taxes for digital nomads. In theory, yes. But is much more difficult than the theory. Why? Because basically we are part of one country. Usually we have some properties, we have a family, some ties that put us in that country. And so if you are leaving the country, the tax agency can come to you and ask, hey, why are you leaving? Where are you going? Then you have to declare to the country where are you going to live. It depends on the country. It really depends on the country, but most of them are doing that. So if you are not, if you don't register in another country, maybe your country of origin can ask you to pay money back. But it's possible to do that. For example, if you are traveling every 2-3 months and you don't stay more than 6 months in a country, you can pay zero taxes. It really depends. That is the magic word of lawyers. It really depends of everything. And why? Because if, for example, I pay, I stay less than 6 months in a country, I'm not a tax resident in any country. But there are people that you are invoicing or like companies that you are working with can ask you a social security number, you know. So, and if you are not a tax resident in a country, then it's gonna be a problem to ask this social security number. If you are from European Union and you're working European environment, definitely they're going to ask you this kind of stuff. So it's really difficult to don't be a tax resident in any country. I'm sorry, guys. I know that everybody wants to pay zero taxes, but there are ways to pay less taxes, but not zero. So the strategies for the digital nomads are basically to don't pay taxes anywhere. As I said, it's quite difficult. Open a company in low tax jurisdiction. That's possible, but if you want to move or as a non-resident. Why? For example, there was a case in Italy. That is a client that is based in Turin. He had a family in Turin, most of the money in Turin, like the company worked in Turin, but then he opened a company in Malta. Why? To pay less taxes. But then the Italian tax agency asked him, hey man, look, that's not possible. Because why? Because you are still in Italy. You never moved from Italy. You have the center of your interest in Italy. So the tax agency can find out. If you move, if you like a digital nomad, you can definitely do that. Why? Because you can open a company in a country and live in another country. In this way, is the best way to reduce your taxes. So, do you need a business to run? Do you need a company to run my business? It depends. It depends on what you offer and how much you earn. Why? Because if you earn a lot of money, definitely you need a company. But if, for example, if you earn, I don't know, 20,000 euro, it doesn't make any sense to open a company because you have a lot of bureaucracy, a lot of papers, you have many costs when you set up your company. So it depends. It depends on your goal. But if your goal is to open to grow bigger, to earn a lot of money and so on, you definitely need a company. Why? Because a company is another legal entity. Most of you maybe knows about that, but it's important to stress it out. Even if you are the sole ownership of your company, you have 100% of shares, your company is another legal entity. It's not you. It's just the company. So all the money that you put in the company, they stay there, and you are not responsible of what happens in the company. I mean, you are not responsible in a fiscal of your money, because of course, if you are the only ownership of your company, you'll be the administrator, the CEO. So the fact of the difference between company and personal tax are here. Basically, personal income tax is what, for example, I have to pay as a freelancer, and corporate tax is definitely. We will see the graphic later. Corporate tax is definitely less than personal income tax. So if you want to grow bigger, definitely you have to open a company. And also you can get some deduction with royalties, dividends, and so on. So there are many ways to reduce your taxes when you open a company. This is a graphic that shows how is the individual and the corporate tax during the history. If it starts like in 1939, before it was like almost the same, and then you see now, like this is 2013, okay, but it's like 40-45% for individuals, and estimate 13 for corporate. So you see that having the corporate tax is always going down, as you see in this graphic. This is average corporate income tax since the 80s, and you see that every continent reduced drastically their corporate income tax. So this is a very good, and I think that is going to be much more. I think that it's going to be, there are still nowadays there are countries that are offering like almost 0% taxes in your corporate, when you have a company, but I think that is going to be for almost every country. So, if you don't want to open a company, sorry, I go really fast because I have a lot of things to say. So, I don't know if everything is clear. Yes. Okay. Huh? Okay. So you see that there is personal income tax rate. So this is for people that are not that don't want to open a company. So it's for digital nomad that want to travel. I put some countries here that I think that are the best if you want to live in that country. And surprisingly, Italy is one of the best countries to live if you want just to be a freelancer. Why? Because there is a flat tax if you earn less than 65,000 euro, that you pay just 5% of your taxes. Or if you lived abroad, so if you don't live in Italy, I think most of you didn't live in Italy, and you want to go to Italy, you basically can pay taxes only on your 30% of your income. That means that if you earn, for example, 100,000 euro, you pay taxes only in your 30,000 euro. 70%, so 70,000 euro are not taxed if you live in the north. If you live in the south, it's 90%. So you basically pay taxes just on your 10% of your income. Another good country is Portugal, the NHR system, so if you're not habitual residents, and it's good because Portugal, as I said before, is territorial, it's not a resident. So basically, if you have a company in another country, you invoice other people outside Portugal, you can basically pay zero taxes on that. And also, all the money that you are getting in Portugal, you have a flat tax of 20%. Another country is Bulgaria, that they have like quite straightforward 10% corporate tax, 10% personal income tax. Czech Republic as well is really nice because if you earn less than 75,000 euro, you basically can arrive to pay zero taxes. There is a system that is quite complicated now to explain, but you can arrive to pay almost zero taxes. And then I put this country, Guatemala, because it's the country with the lowest personal income tax in the world. And when you are going to freelance in these countries and you think that, for example, the personal income tax is really low, you have always to consider as well the social security tax and other local taxes. For example, there is Romania that offers like a personal income tax of 10%, but then if you see the social security, you pay 35%. So then at the end you have 45% of taxes. And now let's see the countries with the low corporate tax. As I said before, there are a lot of countries that offer benefit to set up your company, and you can set up a company as non-resident. There are many countries that offer some benefits if you open a company without being a resident of the country. As I said before, with a company you can have a tax strategy, and you can register a company in a country and live in another one. So when you register a company, the corporate tax, of course, is one of the most important things to consider, but at the same time you have to consider the cost to set up. For example, Italy, you can pay up to 4,500 euro to set up a company, so that's quite ridiculous. And UK, you start from 17 pounds. So it really depends, where you are going to set up your company. And also the cost of management, like papers, accountant, lawyers, and so on. So let's start with jurisdiction competition. Like as I said before, there are many countries that offer many benefits if you set up a company. And let's start with Madeira, as we're here. And you can pay just 5% of taxes in Madeira if you create 1 to 5 jobs and at the same time you spend 75,000 euro, or you create 6 jobs or more. That means that you pay a corporate tax that is one of the lowest in the world, because 5% is really low. And also you have many benefits and exemption to dividends, royalties, and interest, all this kind of stuff that are really important to be not taxed in when you have a company. Other places, Canary Islands, that are in Spain, very close to here, you pay 4% of taxes. There, if you meet this requirement, so you have 100k of minimum investment. If you are in Gran Canaria and Tenerife, other islands like Fuerteventura, you pay 50k and you have to create 3 jobs. Why I put these 2 places, Madeira and Canary Islands? Because the corporate tax is really low, and the only problem for a digital nomad is that you have to live there for at least 6 months and become a resident of the place. In Canary Islands, you have to, and Madeira as well, you have, when you create a job, you have to employ people from the island, and you have to become a tax resident there. So another country is Malta. That is really interesting because Malta has like 35% of corporate tax. And you say, well, that's insane. But if you open a company as non-resident, basically the government of Malta can refund you up to basically the 6/7 of your corporate tax. So you pay just 5% of your corporate tax. The only problem in Malta is that, now there are 2 problems. The first problem is that there is high cost of incorporation because you need to set up 2 companies to do this kind of tax strategy. So it can cost you like up to 9,000 euro, and then the cost for management every year is like 5,000 euro. And also Malta, since the Pandora Papers, I don't know if you're aware about Pandora Papers that were in July, Malta was like some scandal was there in Malta, so now is again in the grey list. That means that it could be possible a problem in the future with the banking to put out money of Malta and so on. So it's a good it was really good to set up a company. Now on, I don't suggest to go to Malta because it's in grey list, and I don't think it's a good thing right now to go there. Another country that is really nice is Cyprus. Why? Because you have just 12% of corporate tax, and depending on what you're doing, for example, if you do trading or you're working in crypto, you can pay 0% taxes in Cyprus. And also, there are no tax on dividends, interest, royalties. And as Malta, there is a high cost of incorporation and management. It costs like €2,000 per year, and the incorporation is like from 2,000 to 4,000 euro to incorporate the company. Then let's see UK. UK actually is not so good for the corporate tax, as is like 19%, and then it will become 23%. But it's really easy to set up. It's one of the easiest places in the world to set up a company, and also there is no minimum capital requirement. As I said before, there is a high corporate tax, so it depends on what are you going to do. And also there is a Brexit. So if most of your clients are from Europe, I don't suggest you to go to England, but to stay here in the European Union. There is another way, that is this kind of company that is Scottish LP, that is the only basically structure that is not a LTD. LTD is the structure that basically you create another company and you are not liable on what happened in the company that is an LTD, and also you still are responsible of the company. So that means that if the company have problem with the debts and so on, you can personally respond of that. So it's like a balance of what you are doing. Now Estonia as well. There's someone that opened a company in Estonia here. Yeah. So you pay 0% corporate tax, but there is a problem when you have to give out the dividends. So because you pay 20% on dividends. Is really nice because it can give to you the Digital Nomad visa, and most of the bureaucracy is online. So it's definitely a country to consider when you want to set up a company. As I said, there is Bulgaria as well, that have 10% income tax and corporate tax. Is the lowest taxation in Europe, but at the same time is not in the Schengen area. So in all these kind of aspects that you have to consider when you set up a company. Romania as well is a nice country to open up a company. You can pay just 3% taxes or 1% taxes, but you can do maximum 20% of job of consulting or management. So that means that is good if you are a consultant or if you are a coach or whatever. I don't suggest you to go there, but if you are, for example, works in IT, you can definitely go there and pay just 1% of taxes or 3%. It depends if you employ at least one Romanian worker. And then there is the United Arab Emirates that create like 30 free zone. Every free zone is like zone for different business sectors. So they create like a zone for, I don't know, crypto, zone for consultant, zone for manager, coaches and so on. And you pay 0% of corporate tax in Dubai. The only thing is that you to have a visa there, you need a requirement of 5,000 euro per month to live in United Arab Emirates. And I think that is the last country that I put on paper, and is Georgia, that as well you pay just 1% taxes in Georgia if you it's 165k if you earn less than 165k, and then if you earn more, you pay 3% taxes. So it's quite fair. No, there is no need to live in Georgia, so you can open a company and you can live in another country. The only problem is that you have to check all the activities that are there, because not, for example, if you're a consultant, you cannot apply to this regime. It depends on what are you doing. If you are in IT, you definitely can do that. There are many people that are living in Georgia right now. So, sum it up. What is the best solution for a digital nomad? What is the best solution for you and for me? It depends on what you're doing, your job, and your lifestyle, and on how much you earn. It differs as well if you own a company or if you are a freelancer, and also you have to consider the place and your clients, because if you have, for example, if you have European clients, you don't want to open a company in Costa Rica. If you have clients that are from Thailand, it's useless to open a company in Europe. So you have to check on what is your goal, what are your clients, and how much you want to grow with your company. Because, for example, you can go in a country that is with a very low tax, but then there are no investors and no venture capitalists. So maybe you are in a country that you pay a little bit more, but you can receive money from the government, you can receive money from privates. So it's something that you have to consider. Now the strategy is to create an holding company if you want to grow big, and there are places like Luxembourg or Netherlands that basically you have an holding is like a company that is the mother of other companies. If you own, for example, 3 or 4 companies, you can definitely have to create an holding company. In this way you reduce your taxes, as many companies do, multinational like Procter & Gamble, Unilever, they have many companies and they have an holding company. So my suggestion is to pay less taxes is to open a company in a country that has a low tax rate jurisdiction. That before the papers, before the Pandora Papers, Malta was a very good option, and live in a country that don't tax your money that you get from abroad, so like Portugal or Costa Rica. In this way, you can reduce your taxes almost to zero. Why? Because, for example, in Malta, you pay 5% taxes. The money that you receive in Portugal or the money you receive in Costa Rica from outside are not taxed. So at the end, you can pay easily 5% of taxes. Or it depends on the country where you are going. For example, from Cyprus, you pay 12% and so on. And I think that that's it.
All right.
Thank you.
That's what I'm talking about.
Wait! Okay, now, from the beginning.
Hit it, boys.